enjoyed watching your celebrations after matches. We've seen the hearts. Last year we saw you playing the violin for your daughter.
Yeah.
You're going to have to explain what the new one is.
It's called Pumpa in our language and Pump It Up in English. It's basically there's a song with my kids, and look, my daughter's doing it right now. We have. You want to show it, darling? You want to show you how it goes? She's the.
Very good.
She's the master. We have, it's a little tradition we have right now, so hopefully we can keep going so we can keep pumping more in Wimbledon.
Well, I think you did keep pumping, and you pumped it up to 100 wins today, and we're looking forward to you out here again. Novak Djokovic, ladies and gentlemen.
Sweetheart. Such a sweetheart. Such a sweetheart.
I assume most people have not heard.
Yeah, you can assume all you want to assume. Just assume one thing more. We're not going to listen to whoever you are. That would be a safe assumption. Why do you say assume and then you say assumption? Doesn't make any sense. Assume and assumption. Those don't go together. All right, everybody. I don't know who's going to be here, but the tennis was very boring this morning. One guy had to quit early. The other guy just lost. And now it's Alcaraz playing. And I know he's great. I know he's a great person. But I just haven't been able to get excited about him. He won at least one or two Grand Slams because Djokovic wasn't allowed to play. And it bugs me. But I'll get over it. He does seem like a good kid. I want to tell you where we stand. Of course, darn it. Can't find my writing. Let's see if this is it. Let's see where we are. Is that it? 5, 4. Yeah, that's it. Okay. So this is where we are. Let me write it down for those guys that are interested. So we have this is how many shares we have of Railtown. 5,466,427. And we're basically, depending on, it's confusing because Yahoo's numbers are different than OTC's. But anyway, we basically have 3.8%. That might be a little high if you use Yahoo. It might be a little low. Yeah, anyway, something like that. It's all approximate. This is a big deal for us. If we can stick together, and I'm not saying diamond hands, I'm not telling anybody what to do, but if we can stick together, this will be as important as any institution out of Canada that buys into the company. And we can designate somebody to go to the meetings and report back. It won't be. It's not like you're going to maybe shareholder meetings, sure. But it's not like you're going to go to the board meetings or anything. But there'll be. This is really significant. If we can increase this maybe Monday or Tuesday, and get to 5.5 million, which I'm sure we're already at 5.5 million because 10 of you haven't even told me how much you own. Approximately 10. And then I want to show you, let me start a new page. I want to show you a couple of things. And ask questions. I've got all afternoon. Tomorrow, I'm not sure I'm going to come on in the morning because I've got 2 errands, and then Djokovic plays probably 11 a.m. and I want to watch him, so I may not come on till as late as 2 tomorrow. So I'm here today, and you know, we'll play it by ear. Let me show you a couple of things if I can find them. Oh, so annoying. I can't get this up here. Ah, here. Okay. Here it is. All right. Let me show you this one first. This is where Railtown closed on Friday in Canada, 69 cents. Now, if you'll notice the volume in the middle of the page, that's over 400,000 shares. And a gentleman asked me the other day, isn't it just our volume that's making it go up? I have not been of the opinion that our volume has had anything to do with the stock going up. I think that the algorithmic selling computers, short selling computers in the United States have stupidly but automatically given us all the stock we want. I think this is a Canadian event, these higher prices, and you know, maybe I'm wrong, but what does that say? 429 was the volume on Friday, and we weren't even trading. And you see the 69 cents where Railtown closed. And then if you translate that US dollar to the loonie to the US to the greenback, and assuming nothing's changed in the ratio of the $2, as of Friday, Railtown closed at 51 cents a share, which is bloody impressive, Mike. It's bloody impressive. You know what I mean? You know what I mean? You know what I mean? You all right? All right, so this is Railtown. And see that diagonal line that I drew, which you could draw it differently. You could do one higher than where I did and more of a shallow slant by raising the right-hand side and lowering the left and leaving that little pop up as the anomaly. But this is the way I see it. And what it shows to me is that when Railtown earlier ran up and then they tried to get it back down, and a lot of you bravely stepped in, many of you told me it was going to pull back, and I guess you were right. But, you know, it's always risky. You can't count on that light. There's a classic, if you use that declining line as a resistance line, there's a classic, I don't know if it's classic, but a pattern that shows up where you try to break the line once, even though the line didn't exist when it first was created. And then the second time, even though those two created the line. And now this was the third time through. When it rallies up, and obviously 40 cents, I couldn't get. I couldn't figure out how to do the horizontal, but right around 40 cents, 42 cents is an obvious horizontal line that we've also broken through now. But anyway, you break through the resistance, and then it pulls back to test the resistance. Resistance becomes support. And that's what essentially happened. And then it bounces off of that. We've run through the 40 cents, the 41 cents, the 42 cents. And you can see it there. I've shown you the chart before. I deleted it, but I've shown you the horizontal line before. And this is, however you want to count it, the third time through, fourth time through, but we've broken out. Now, where I've drawn the yellow line, it's fatter than I would have liked to have drawn it, but that's, there might be a little resistance in there, but I don't know. I think any weak hands are long gone, so I don't expect there to be a whole lot of resistance there. Nothing goes straight up, and in fact, you don't want it to go straight up. You'd like this to pull up to maybe 56, 58, and then pull back on either time or volume, pull back so that it sets up strength to keep going. But then obviously you can see the top, it's right around 62 cents. And in fact, it is 62 cents if you look at the high lows. Quickly, I just want to mention, what's this one? This is finger motion. I did this chart. If you look at the descending wedge in yellow there on the right, that to me was very bullish, and it broke out, and I thought it could at least go to $3 and then maybe even try to fill that gap. I have to say I'm perplexed with this sort of flagging action. I don't think it looks particularly bullish, but I could be wrong. $2 seems to be the support as I circled, so maybe we get a bounce here. But I have to tell you, I'm perplexed. I don't know what it means. Are we starting a new wedge? Do we just need time? But to me, it doesn't really, absent news, it doesn't per se show anything to me on the chart. But hey, I'm a guy with a pen. That's all. I don't know what I'm doing. And then this is GBUX. I've heard, through the grapevine that something good might be happening this coming week or so, maybe as soon as tomorrow. I didn't draw a wedge down there because I don't see one, a declining wedge. On the other hand, other people might say there is one there. You could also draw a channel that it's broken out of. I don't know. I don't have the skills to see much there. But the stock did break up over 3 and has pulled back. And that says something. The volume you can see down there was strong. So it's telling you, it's projecting that it wants to do something. So I would guess that horizontal line is resistance at about 420, 450. Again, you could draw a different line. I didn't want to draw a steeper line than that. And once it breaks through, maybe it pulls back to test. But once it breaks through, I think it goes to 7, the yellow line I have, if it breaks through. Does it go back to the highs of 10? Some of that was pre-market. Well, look out for it. I personally would say the odds are not, unless there's huge news, the odds aren't good that it will break through 10 or that it'll even approach it. However, the odds are, I'd say, if I have no idea, but if there's something good going on, the odds are pretty good it gets to 7, maybe 8, So that's GBUX. And the reason I wanted to bring those up to you is to reinforce one message that I had, which is, I guess, kind of, we can't be in everything at once. But secondly, just because these go up, if they do, doesn't mean the decision, if you switched out, and I'm not supporting it or promoting it, but if you switched out, doesn't mean your decision was wrong. You have to make your decision based on risk, reward, probabilities, timing, your own theory of what's going to happen, and then other things can happen. But I just want to give those 3 chart updates. And I had a list here what to go over. Of course, I've lost my list, so I'll try to do it. I'll try to do it by memory. Let me just look at some of your comments. I'm very excited about Railtown, and I want to commend everybody that's had the courage to invest. Railtown looks like it's breaking out, and we'll learn a lot as we go on. But it's possible. It is possible that we're on to something, So let's just be alert. As we talk today, I'll probably be repetitive, but I'd like anybody that is considering adding to their position of Railtown, I really think you have to act with alacrity, like 9:30 in the morning, Monday or Tuesday, whatever chance you have to do it, I would do it, because the MOU that was announced on February 11th, pretty soon it's going to be July 11th. And I just don't see it. I think we're living on borrowed time in terms of expecting announcement that deal is completed. I felt, as probably as we look back, I was a little too early, except that Railtown's basically, it hasn't really doubled, but it's whatever it's done. It's up 20 some cents on a 26-cent stock, roughly. So if we count Friday's action, it's doubled basically. And so that timing was good. But I haven't been correct so far that the MOU is completed. But I think any day it could happen. So I wouldn't dawdle. I just wouldn't dawdle. But let me just go down the list here. Hey, Ryan, I'm very excited for Railtown. More excited than I am for Djokovic to win his 25th Grand Slam, which I don't know how he beats Sinner. He'll have to be on cloud 9 to beat Yannick Sinner, the cheater. Hey, Mark. Hey, Gary, how are you doing? On a walk with Sherry. Wow, 4 miles? Wow, 4 miles. I used to walk Lucky that far. 4, 5, 10 miles would be a big day. But I'm just, getting rotund because I don't do it anymore. First time caller. All right, Edward. I'm writing that down. Ed, I think you might have single-handedly. No. Yeah, I think you did. We needed 40 minus 6, so we needed 34. Almost. You almost got us to 5.5 million. That's great. That's awesome. That's a good position too. Lucky number. And, any position that you guys have, you're going to be happy with. Even if it's 500 shares, it's going to make a difference. But for those of you who can stand to do 10,000 shares, cost you $5,000 now. A couple of weeks ago would have cost you $3,000-ish, and then $4,000. Now it's $5,000, but it's still totally the thing to do. Don't get caught up with, I wish I shoulda, coulda, woulda, I'd have more shares. Just take the plunge, in my judgment. Let me give you my Jennifer disclosure. I do not have a contract of any kind with Railtown Technologies AI, and I haven't been paid anything by them of any nature. My general disclosure is this isn't, nothing I'm saying is true, potentially, and it's not financial advice. But I do think it's editorial, it's opinion, it's educational, it's strategy. And I do the best I can to tell you what I think is factual. But it can be summarized by saying that the responsibility for decisions are yours and due diligence is yours. I try to give you sources you can go find what I'm saying on the website or charts or whatever, research. So yeah, that's my disclosure on that. Let's keep going. Thank you, Edward. That's awesome. That's a great position. If that goes where I think it'll go, well, let's go back to it. Let me tell you, I've been sussing it out a little bit where I think the stock, I just showed you the first stages. So, maybe Monday, Tuesday, it gets into the 55, 58 cent range. And then maybe the 62 cent range. I still believe it is a screaming buy. I'll show you in a minute why. But I think it's a screaming buy up to $1, up to $1.50, up to $2, $2.50. What's going to happen with Railtown, in my judgment, is once it's a $5 stock, I'm not going to say that's the absolute floor, but you're going to see buying come in my judgment, and it may not be right away. It may take time for the idea to float out and build momentum. On the other hand, it could be right away. Who knows? But you're going to get a broad participation from the wirehouse retail systems. You're going to get institutional participation. And I tell you guys and girls, we are one of the collectively, I think we're the third largest holder in the stock right now from public information. And we'll stand in there with the biggest of institutions, at least early on in the game. So be proud of yourself. We'll have some, pride of ownership, pride of collective ownership. But I think once the stock breaks 62 cents, I think it's headed to $1.20. Then it pulls back maybe to 1 or 97 or something. And then I think it's on its way to $2. Same sort of dance. Then probably $2.50, $3. And then maybe it does. I think $3 is a pretty significant number. $1 will bring in some buying of institutions, probably, and wealthy people. $2, it's marginable, and a lot of firms take it from restricted for a different reason. They take it from the restricted list and make it available to buy. So $2 is significant. $3, I think, is a institutional. For some of the smaller funds, I think $3 matters, but I don't know how much. $4 matters, but I don't know how much. $5 really matters, really matters. And I think if it breaks 5, it's the weirdest thing. I just described kind of a start, stop, start, stop, start, stop, but ever increasing. But once it breaks 5, I don't know, 8, 11, 13, 15, it'll run. And I'm not talking about short squeeze. I'm just talking about demand coming in from people who understand this space. I'm trying to educate you inefficiently because I'm not an AI guy. And so once the quiet period ends, I'm sure we'll start hearing from people who their brains are wired that way. But I am somebody who's seen trends and seen money movement and seen. Oh, I gotta put a charger over there. Bingo! Wow, that went down quickly. It was at 45%. Now it's at 9%. But it's charging now. The flood of capital that's going to come to AI 2.0 is going to astonish you. For about a year and a half, 2 years, it was the MAGA 7, the Special 7, the Magnificent 7, the 7+1, the 6+1 or 2. It was just a handful of stocks everybody was in. That was the story. And that's what the investment managers chased in order to get their fees and to keep money under management. I think by the end of the year, there's going to be an enormous shift, although NVIDIA and some of these others are going to be part of the AI 2.0 story. So they're likely to hang up in there. But I think you're going to see competition amongst managers to own these shares, AI, and perform with them, and so they can appear in the top quintile, the top decile, and maybe better. And it's going to be a competition. And anyway, Ed, if I'm right about all that, your 32.5 could be worth a lot of money in 90 days or by the end of the year. I mean, just to use $10 and you can take it downward. My target, though, just to be clear, the target I'm confident in right now is 10x from here. So let's call it now $5. If it goes to 60 cents, I'd still be confident that it'll go to $6 in the short run, the relatively short run. I'm pretty confident it'll get into the low teens by this fall. But I'd like to defer on that a little bit. Let's just get the first part done. Let's see what information comes out. Let's process it, because we don't want to let our vision addict us to the stock. We have to be ready to dodge and weave as information supplies. Hey, Frank. 3.8. Yeah, Ryan's saying 4%. That's true. Up 39%. That's great. Yeah. Yeah, the acquisition, which people, and no wonder, it's very hard to get excited when the stock hasn't really changed much. But this acquisition is I don't know what multiple to give it, but Railtown on its own is essentially 4 products, 4 companies, although they announced a 5th item. But from everything I'm reading in the releases, and you listen to the videos, it's this conductor. The other things probably are related to conductor, but it's conductor that is the first mover. It's changing the market. It's addressing a real problem. It's addressing a huge market, and everybody wants it. It's meeting with industry acceptance. Well, that conductor, just with Railtown, is enough to make the stock do the things I've just talked about, although maybe take a little longer time frame. But when you add in the purchase of AI Partners, which is 160 some odd companies, all in the AI space, all with their own clientele, as they say in the UK, with their own clients. And remember, AI Partners, run by guys who founded OMERS, and John Ruffalo, who founded OMERS Venture Fund. That's the Ontario Municipal Employee Retirement System. And also, John was one of the early supporters or early architects of Constellation Software. $1 to $5,000 over, took more than a decade. But still, that's truly a stock you just buy and hope you never sold it. And this might be an analog to that story. I think it is an analog to that story. So this Railtown acquisition of AIP Partners, not only are you bringing in that mental knowledge, that understanding of markets, you are bringing in 160 some companies who all want to use conductor, and all their clients want to use it. It just is a gigantic change for the good in the story, and it's not showing up in the price yet. But it will. It will. Hey, Chico Ed. When Railtown takes over AI Partners, would you expect the deal to include the right to match buyout offers than any of the 100 decisions get from third parties? Yes, I would assume that one of the reasons this has taken so long is that, it's taken 5 months basically. March, April, May, June. Now we're in the 5th month, so a little over 4 months. I think one of the things that they may well be doing is getting I don't know if it'd be a non-compete, but it might be a ROFR. They might be getting a first right of refusal or a right of first refusal, ROFR, from all of these companies. And yes, absolutely. Why would it be written? Because I think you would have to build into the language mechanisms of delay. In other words, if you just put it out there that 160 companies, they had a right to buy them. If there was a run on the companies, in other words, if there's a huge amount of capital raised on Wall Street and they're all looking to buy companies, it's possible that Railtown say, wait a minute, 30 days isn't enough. 30 days notice isn't enough. Because if they got notice from, I don't know, 50 companies at the same time, it's a lot to sift through. But anyway, I'm sure my opinion is all these companies will want to stay in the Railtown umbrella. But it's always a matter of price. And but yes, I think they would have the first right of refusal or the right to match it. And if they match it, they get it. Yeah, Ted, I'm going to try to do the best I can with that. I'm not always good at it, but remember, the shills come in a friendly way. They come in a very knowledgeable way. They come in combatively. They come in trying to make the group turn against me, the one that happens to be talking. So you get, and then they dodge and weave. They're hurt. They're friends. They want to quit. They come back. Anyway, you start seeing what they are. And you, I hope, will join me in not making investment decisions based on anything you hear from the shills or someone who you suspect to be a shill. They do not have your interests in mind, and they only have their very narrow interests, which is highly competitive and urgent to day trade. And I'd like Railtown to take us away from the need to day trade or trade quickly or move as soon as a guy with dyed hair and a British accent who says that it's his fight comes on space calls and everyone's breathless. We've got a CEO, oh my gosh. And then he does a big deal and does a reverse split. Everyone's wiped out, but he's flying first class everywhere with his secretary. It's not what you want to do. Hey, Rondell, welcome here. Here's finger motion has that gap to fill up to 350. Yeah, I think that's if it goes up, but yeah, that's what you know more about day trading than I do. It doesn't have to fill the gap anytime soon. But if there's momentum to the upside, if there's a reason the stock turns and goes up, that becomes a magnet. That target becomes a magnet. It also becomes a place where it might stall briefly. But it doesn't have to fill that gap if it doesn't go up. I don't know where we are with Finger. we can maybe talk about China a little bit later, but I think that President Xi is probably on his way out. He's probably being removed from power. My sources, I can't, it's not in the mainstream media. I would argue that our media is all controlled by the Chinese and the banks. The Biden administration was controlled by the Chinese, I think. And I think there's a fifth column of Chinese women and men in the United States. They want to break us down. I think it's a shame. I think we should cooperate, but we're not really our own best friends in how we behave, and particularly when we step in the role of the British colonial system. Anyway, one obvious risk is if Xi is replaced, and that I just said that I think, and now I'm saying if, and so you don't have to give it a lot of credence that Xi will be replaced, but I would give it at least 50. I'd give it 80% that he's a goner. But I could be wrong. But if he is, it'd be interesting what happens to the relationships that clearly are important, that are in place. So I think we just have to keep a heightened eye out. It could be all good news. It's just a risk is the wrong word. It's a variable to pay attention to. Hey, Donna. I was going to sell. Well, I can't give you financial advice, but I can give you my opinion. So your question is, you have 55,000. Let me look it up. I think I have different lists. There's some over there, but I think I have you on a recent list. Yeah, 55,000 shares, you said. So you have 55,000 shares of Railtown, which is a terrific position. Number one, I say that. So you can be very content and happy with 55,000 shares. Second point I'm going to make, I'm not sure you're going to get a chance to buy more Railtown at these prices. But if you do, I would grab it. I'd grab all you can with both hands. I wouldn't even think twice. If Lyon's right, I don't think Lyon said this. He said there's a gap, they have a gap to fill, but I don't think he said it's going to go there. But anyway, if we take the positive of what he said and finger goes to 350, you make you've got 2,500 shares. You would make $1.75, $1.50 on 2,500 shares. You'd make 37.5, and if it happens, I don't see it in the chart right now. I think we're in the slow part of the summer. I don't want to be overly negative, but I can't be overly positive in the short run, in the narrow short run, about what's ahead for Finger. I mean, they got, as far as we know, they got 2 cars done. They funded more, but we don't know how many more. BVD, according to a couple of sources I followed, that's the electric automobile company in China. Supposedly they're doing gangbusters, and but their margin, I think it was 5.3% profit, is manipulated. Apparently, it's not necessarily accurate at all. But what is true is they don't make their payments on time. They're taking 18 months to make their payments. If that rolls over to Finger's situation where there's delays in payments because of the overall Chinese recession going on, remember the thing is the government can be like we were and turn a bazooka on it and flood the markets with money, but maybe they're already doing that. I don't know. Point being that Finger might need to raise more money before it starts seeing revenue. Almost certainly, they're not gonna have huge revenue coming in the near horizon from their C2 contract. We know they do the top-up business extremely well. We're unaware of any other major contracts. So I think 2025 is going to be another $35 million, maybe $37.5 million year, not profitable or slightly profitable. I don't see Finger Motion going up. But anyway, if Lion's observation, which I share, there's that gap. If Finger for some reason had good news, which by definition we don't know about if it's going to be a surprise, 350 I think would be the stop. More likely, I think Finger is sideways until September, and it has risk if they raise money. Just ask yourself, if they turn to Roth Capital to raise money, is Roth Capital going to do it at the market price, or are they going to discount it? And you just come to terms with your own thinking on that. But I think if you sold 2,500 shares, look, if you sold it just as a temporary trade even, you might be turning a long-term capital gain into a short-term. You bear that in mind. But, we don't make investment decisions first and primarily about taxes. We do it about making money. Then it's a factor after you've made your decision maybe on timing. But anyway, with 2,500 shares of Railtown, let's say I'm going to just use a high number. Let's say you buy it at 75 cents. You could buy 3,000. So let's say you buy it slightly less than 75 cents. You could buy 3,500 Railtown, and maybe more. If you can get in at 50 cents, you'll buy more. Well, let's see how much it would be at 51 cents. Yeah, you would be able to buy 5,000 shares, and accounting that maybe you have more than 55,000, you'd be able to buy 4,900 something. So if you got, let's compromise, call it 4,500 between those two numbers. If you had 4,500 Railtown between now and between now and September, let's say sometime in September. So give me the entire month of September, beginning and the end. If that goes to, I was going to say $11. If that goes to $10, you've got 45,000. So by my little arithmetic, I think you stand to make far more money in the short run in value in Railtown than you do in Finger. I don't see anything. And I've followed Finger pretty closely, and I've called it pretty much. Doesn't mean I'll continue to call it well, but Donna, my biggest caution about Finger, they didn't raise any, they raised very little money. Why? It means to me the C2 contract, well, okay. There could be a good reason why they didn't raise much money. Maybe they have a pending thing we don't know about that's so big, it's an alliance, it's a big pile of cash coming in, it's something brand new. But I don't know about that. So that's just gambling. That's just gambling. But what I do know is they didn't raise a lot of money. So obviously they don't need a lot of money to get a lot of the C2 contract done right now. So at least for the time being, that contract isn't huge, which means it's not going to be big on the bottom line either. In the near term, just talking near term. I'm talking the next 90 days. Railtown, on the other hand, Donna, I think Railtown's headed to, by October, Railtown could be $15. Now, that's not my target right now, but I'm telling you, when you're, my opinion, how I look at these stocks, your risk, you want to isolate, and then what's your potential reward? It's not guaranteed. I don't think there's much upside reward in Finger right now. Like Lion says, maybe it fills the gap at 350, 340. I don't know the exact top. On the other hand, Finger could stay where it is, and frankly, it's got a gap below it too. So, we could argue maybe it already filled part of that. I don't know. But in return for the risk in being in Finger, with 2,500 shares, you can make, if I'm right, that it caps out at that gap if it goes up at all. That's 37.50 you can make. If I reduce the amount from 45,000 down to 37,500, you've got 10x difference in potential return. What's the risk in rail? We'll go over some of what's generically going on with Railtown in a minute, but I don't see a lot of risk in Railtown at all. You're literally getting in as I don't think I've ever been to a debutante ball, so I don't know what happens there. But you're getting in as the girl goes to her debutante ball, and all the eligible young men are there. Her chances of upside in terms of getting a catch, double, triple, quadruple, 100-fold, and that's where Railtown is. It's coming out to the debutante ball, and Railtown came out to its own debutante ball last year, and it might have danced a couple of 2 times, but all of a sudden, I don't know, Rockefeller and Vanderbilt aren't powerful anymore, but all of a sudden, a Gates or a Bezos or a Prince Solomon or a billionaire is dancing with they ran into it with AI partners. The belle of the ball met the king of the pops or whatever. I don't know the analogies. So Donna, you want my opinion, and I can't give a financial advice. I would sell and buy if you can. It's possible any day. This is why I've been so insistent. Any day it's possible that Railtown runs. You know, there's news and it's up. But I would pay almost any price of Railtown before they make the MOU announcement final, which I expect. The stock price is telling you, in my judgment, that that deal's been done. And, you know, I would, any price up to $5 is going to be a bargain, and probably any price up to $10 will be a good investment. But right now it's just a screaming buy if you can get it at, I don't know where the stock's going to be Monday. The stock's broken out. It may not get to 62 cents. So maybe you buy it at 58. I don't know, pick a number, 58 cents. And you've got 2,500 times 2 roughly divided by 0.58. Wow, you could end up with 8,000 shares. Wow. Let me do that again. If you sell 2,500 at 2 and you buy Railtown at 58 cents, you could have 8,500 shares, and 8,500 shares goes to, let's say, if you give me all of September, if it goes to 11, that's 93 grand. But before all of that, the first stop is 8,500 goes to $5. That's 42,500. To me, it's just black and white clear what you should do. And you can sit down with a pad of paper like those idiots, the idiot salesmen. What would Ben do? Benjamin Franklin, the pros and the cons. Or you just one sheet of paper for what you think Finger's going to do, write down all the positives, write the risks, write the targets, what could happen in both directions, and do the same with Railtown. I don't see, I mean, obviously it's a speculative stock, but Donna, this report came out a year ago, speculative buy, and a target of $5. But I found this, let me just show you something, Donna. I found this while I was trying to get ready quickly today. Is that it? No. I don't want to show you something that's provocative and unintentionally. Oh, shoot. I don't know which one. Well, let's just try one. Let's say it's not that one. Let's see what this is. Oh, that's the chart of Railtown. All right, let's see what this is. Okay, price target. This is a crappy service. I wouldn't say that it's the be-all, end-all when it comes to research. It's just a collation, I guess, by AI. But it says the average one-year price target for Railtown is $1.50. Like I say, it's not the best research in the world. This group had a $2 target on Railtown a year ago, based solely on Railtown, not on the AI partners. And you got to remember, this acquisition put a freeze on everything. Once it comes out of that freeze, which direction do you think it goes? And then they had the bullish case of 360, I think, and the bear case of 90 cents. So that was a year ago, and things have only gotten better. I if I were in your shoes, I'd take a deep breath and say, well, finger could go. I would punish myself. I'd say finger could double unexpectedly. But I think in any time frame that finger doubles, Railtown could go up by 10x short term. I don't think it's going to be a straight line. You know, I gave you, it's going to be stair step. It could take 6 weeks, 8 weeks, but it also could happen in 2 days. Just don't know. Just don't know. So I think Railtown's price right now should be $5, $6. And remember, I started at 350, so I'm allowing myself to be moved upward, but I'm comfortable with that. Railtown is mispriced because of the suppression caused in news flow, in research, in sharing of knowledge across the investment world, but also the restriction, nobody can buy it that knows what they're doing. And I'm not saying we don't, but I'm just saying the big swinging bats haven't been able to buy. So I know where I would be. 40 grand versus 4 grand upside. And with finger, you might not get that upside. It might be flat, flat, flat. Railtown, I think it's happening, boy, right now. The question is, can you still buy it under 60 cents on Monday? That's going to be the question. It's breaking out. It had a good day Friday. That would be your second question. Would you do it at 60 cents? Yes. Would you do it at 75 cents? Yes. Would you do it at 80 cents? Yes. 90 cents? Yes. $1? Yes. $1.25? Yes. $1.50? Yes. I would buy any of those. But the higher it goes, the more likely there'll be volatility on a day or 2 or 3 downward, and you'll just have to gut that out. But looking backwards 6 months from now, 9 months from now, you're going to be glad whatever you own. Having said all that, 55,000 is a terrific position. But I would be greedy for all the shares of Railtown I could own. That's how I am. I don't have any money. I don't have any finger to sell. I can't, I'm maxed out. But if I were doing it, I would max out. There's times, that one guy came on here and said, what about, it's important to be diversified. I don't think that's right. I think diversification is a rationale that Wall Street teaches you so that you give your money to them to manage so they can do all this gamemanship that we've experienced. The fact is, whether you're in finger or WOLF or WULF or Railtown, for the time being, they're all in this category of over-the-counter speculative stocks. That's not diversification. The more you spread it out, the less likely you're ever going to leave this part of the market, which is the absolute worst part of the market to be in, unless you're informed or have information. And I think I'm doing my best to inform you about Railtown for what I see with it. Donna, I think hands down, I would want to own all of the Railtown I could own over the next 4 weeks, 8 weeks, 12 weeks. Now, the problem is Railtown, we don't know. Monday morning, it could open at 60 cents. or it opens, or it opens at 50 cents. That would be great if it just opened at 50 cents. But Railtown is headed upward. Every fiber of my being is saying that. And the hesitancy you have is maybe hearing that Finger's going to go to 3,500. It's never going there. Finger isn't going to squeeze. It's not going to squeeze. I mean, there's setups where Finger could squeeze, but I think now that so much time has gone by, I can only say I've for quite a while felt that GME and AMC are under control. If I feel that way about those two stocks, why wouldn't I feel that way about Finger? They got GTEII under control. They hired a few guys. They got, well, Vocal might have been in on the gig, but at best, they got Vocal under control. They got CRTD. They got, GNS. They got CO. They always get them under control. So if I were you, I would run as quickly as I can, grab the handle, lift myself up on the train as it's leaving the station, and just leave all these crappy, I'm not saying each individual stock, but just this milieu of crappy stocks and shills and shorters and manipulation and pickpockets. I'd leave it all behind. Because Railtown is a one decision stock. You can worry about Finger. You can say, oh, I could have gotten 350, but you know what? By that time, Railtown might be $3 itself, 350 itself. Railtown is a stock that if you buy it, by the time you're my age, or let's say it differently, by the time the next Congress has to run for office, if you have 55, if you were able to round that up to 60 or 65, man, could you imagine at $10? You'd have $650,000 of asset. That's a big number. And why are you even worrying about any other stock? This is the ticket. This is the ticket to ride. This is the train to ride. The one caution I give you, if you think about buying Railtown and it goes to 5 or it goes to 6 or 7, and you say, wow, what a win for retail, which I don't want you to think that way. And you say, I'll sell it then and I'll come back to Finger. I'll come back to my old boyfriend. I don't think your old boyfriend's going to have changed much by then. I think you're going to want to stick with your current boyfriend. Once you're in Railtown, I just caution you, you may never want to sell. And we'll follow the information as it comes. But you may find that you just go, wow, I'm so thankful I'm in this. And I'm going to hold on until there's something that scares me out. That's not just emotions, but there's, some change in circumstance. But you may say to yourself, I want to hold Railtown until, I'll from my notes, when Corey Brandolini was talking a year ago on a video, which we listened, I played it for you. He said, what I wrote down, bundled in with apps in GitHub. Now, I think he's talking about Conductor, but I forget the rest of the sentence. But GitHub's owned by Microsoft. And the video, you can go back and replay it. We can replay it too. But let's just pick Microsoft as an example out of the three, Microsoft, NVIDIA, AMD, that are their partners. you may say to yourself, I'm not selling any Railtown until Microsoft buys them out. That's the exit. That's your exit out of this investment, is they will sell to a major. When, I don't know. What price? Massively higher. I don't know the number that they have in mind, but it will be, compared to here, it'll be gigantic price higher. And you may say, I'm not selling. I don't want to take the tax consequence. If I let Microsoft buy it, I have no taxable, immediate taxable gain until I sell Microsoft. If that's the case, maybe it's AMD, maybe it's Apple. Somebody's going to buy them, in my opinion. That's what happens in the technology space. But remember, as I'm saying those things, I'm getting way out ahead of our story. Right now, the story is what happens once that contract is finalized. What is the proper price as Railtown seeks its own level? And I'm making a very strong case that it will at least 10x, but it could be higher. On the other hand, it could be lower, but it's going to be much higher than 50 cents, 51 cents. So Donna, I wouldn't think about, well, I could have sold at 350, I could have sold at 5. I wouldn't think about any of that. I wouldn't think about, well, it could go to 3,500. It's not going to do that. I personally, since you're asking me, if it were my own situation, I'd take a deep breath and say, oh, this is going to hurt. If something good happens to Finger, I'm going to kick myself. But I'm going to know that even if something happens to Finger, it's a week, it's 2 weeks, it's 3 weeks, 4 weeks down the road. Railtown could happen Monday or Tuesday or Wednesday. And I've said that all last, just so that you put my prediction in context. I've been saying that all June. But just because it hasn't happened on any of these days doesn't mean it's going to take an endless number of days before it does happen. In fact, I would argue the fact that June has gone by makes it even more urgent that Railtown and AI are going to conclude their romance and hitch up and go to Cancun or wherever the hell people go nowadays. Cancun sounds like hell. I think maybe Mauritius Islands or something. Anyway, I would go with, I would, this is the stock to go all in on. And, the shills are going to say, well, what about diversification? Well, go all in on this stock and then you'll have something to diversify in 2 years. But once you're in it, you may not do anything with this stock for 2 or 3 years, Donna. And that's what you're going to have to figure out. What are you going to do? Go play golf? Start traveling? But this is not going to be a hot hand stock. And I don't want you thinking like all these other stocks. This is a set it and forget it stock. This is a stock to get it right and sit tight. This is a position to build and then go do the crosswords for the next 18 months to 24 months. And I think you're going to be, you, Donna, are going to be one of the most content people in the world if you do that. We don't want to brag. We don't want to get bigger than our britches. Well, I just need bigger britches. Um, but if we can hang on for that period of time, I think each of us are going to do what my goal has been for people, which is to become our own financial island of strength, our own central bank. Now, I want people to own silver. I want people to own some of the mining shares, but I'm going to come up against a crossroads where I'm going to have a hard time telling anybody to sell Railtown. The message is going to be, oh, manage your money. Well, you know what? I think you manage your money in Railtown at much higher prices. Donna, I think Railtown, what is it now, 50 cents? $5, $50? I won't give you the other one, but there's a logical number you can go higher with. I wouldn't sell it at all. Now, I hope it doesn't have a short squeeze. I really hope, because if it has a short squeeze, then we're in a quandary. Obviously, we'll cross that bridge when we get there. Let's just assume it's not going to have a short squeeze. It's not a short squeeze play that I'm presenting you. But anything can happen, so we got to be ready. But Don, I would. You have enough to be happy. So if you wanna just have something to play with, just realize you're giving up the opportunity to own 10, yeah, I mean, if you got it at 50 cents, you'd have 10,000 shares. And if 10,000 shares goes to $6 in the next few weeks, that's 60 grand. And if it goes to $12 in the next 2 months, 3 months, it's 120 grand. I mean, I don't know. To me, that's a lot of money. But and I really mean that. That's what you're debating. Do I want to me, there's a very near certainty in a speculative way of that 10x. But could it double from there? I think it's also very likely. But, let's focus on the first 10x. Let's digest the information and make projections from there. But Donna, the more days you wait, we could wake up one morning and the stock has already completed its first step. The news is out. The heat is on. It's on the street. It's on the street. The heat is on. Clever words. What lyrics those were. Anyway, that's so Lion says Finger has found a bottom. Look, I've found recently that I think Lion tends to, it's possible that he works with some of these other guys. I don't know. But Donna, if you want to be a day trader, listen to Lion. I'm trying to pull you out of that nightmare. And Lion is asking you to hang on because Finger's found a bottom. Well, fine, maybe it has. And maybe it's going to achieve, but when? When? 90 days? 2 days? Next year, next January, the cycle will be ready again? It's found a bottom? What the hell? I don't think that's clear at all, by the way. I think there is support at $2. Support on Finger is very strong at $2. But it collapsed when Roth Capital did the deal. And Lion's day trading, which is fine. But is that your life, to be a day trader? Sit in front of a computer? Imagine Imagine, Donna, if you were Monday, I'm not sure you have this option, but you were able to sell your finger and buy 10,000 shares of Railtown, and Railtown went to $50. We're not there. That is an 18-month, 2-year thing, and we're not making that call yet. But that is what I'm anticipating. A call I'm anticipating. But let's just say it goes to 50 if you can hang on. But you got to hang on. You're not listening to Lion anymore. Oh, it's made a bottom and all that. Your 10,000 turns into 500,000 if that happens. By the way, I don't think 50 is the top in the stock either. But anyway, if I'm not ready, because Lion's here, it's forcing me to tell you the upside I see. Because he wants you to be hot money. It's found a bottom. What the fuck? Sorry. What does that matter? So is the CD at the bank. So is cash. Found a bottom. So has Keanu West. He found a new bottom. So anyway, you've got $500,000 on 10,000 shares if it goes to 50, but that'll take 18 months. So you have to wait and ignore Lion of all trades all that time and not get into his day trading. He's not always right. He's the one that brought HNRC and pushed it for its dividend. And I looked at it and said, hey, that looks like a great idea. I bought a bunch, but it's completely dead money. So Lion is no Lion of all trades, but in his name, he's a trader. If you want to be a trader, follow Lion. But all right, Donna, let's say you've got $500,000, and let's say and I'll show you, we get it into 4 or 3, 5 oil and gas royalty stocks that have been around for 50 years, 40 years, 30 years. And they're all paying 14%, 12%, 10% now. Let's say we get 8%. 40 grand a year divided by 12. You'll be collecting $3 grand, 3,500 a month. And you really want to worry about finger? Anyway, sorry. I'm pushing you too hard, Donna. I'm pushing you too hard. Hey, Sada. Glad to see you. And I'm glad. I was talking with somebody yesterday, a guy that used to be an investment banker, and anyway, by the end of the conversation, it got a little bit philosophical. I'll leave that. That's a private conversation. But you were one of the people I brought up that I'm extremely thankful who bought Railtown. And if my last weeks of work, it were only you that bought this stock, I would feel that I was lucky and I was gratified. I don't want people to be hot trading. You know, Lion's here. He's trying to build a reputation. He's a reasonable guy, a friend. He's a good trader. You can trust him, all that. And that may be true. But you, in your head, you've got to also be asking, is he part of that system? And whether he means to be or not, he is part of that system. Whether he means to be, but he might intentionally be part of it. I don't know. I don't want to get into all that. All I'm saying, one of the key parts of the MMTLP, the Torchlight, MMAT, MULN, COSM, CRTD, GNS, WOLF. It's hot money, hot money. Move it, move it, move it. Because they need your money because they don't risk their own money. They don't risk their own money. They need you to risk the money. They need you. You're the piece that gets the algorithm in the buy-side computers who are cheating to get the stock moving up. I'll use finger motion as my example. And I said it as it was happening. I said it live as it was happening. I didn't emphasize it because I didn't want to be a DAC. But I more than once expressed it. I got a lot of blowback, a lot of negativity. In fact, Ham stopped coming here at all. But it was my opinion, and I still hold this opinion, that the toad there's the toad, better known as Andrew Left and Kassam funds, the toad, out of Toronto, had turned on their algorithmic machines and trading desks in the Cayman Islands. It's all fraud. It's all illegal. Collusion. They break every rule. But by you, I don't know if you did, Sada. I'm not saying you, the English language, there's a singular you, there's a plural you, and then there's the you that we're not supposed to use that describes everybody. But they don't give you another, I guess everybody. I don't know. But anyway, I'm talking in the broad retail sense. What Anson Funds wants is finger motion, if I'm right on my theory, finger motion to start going up, more people to buy in, people buying calls, people buying option. There's a premium there. The computers see those option premiums. They buy more stock in a hedge trade. They buy the stock, sell the calls. That doesn't have any maintenance requirement, at least for the period of time, or it's a very small one, because it's a hedged position, somewhat. It's not perfectly hedged. They'd have to buy puts, and then there's no margin. Then it's a synthetic share, and if they can do it at a few pennies profit, they do it all day long. They multiply it. But this is what I think the toad was doing in finger this year, beginning of this year. So as the stock goes up, retail comes in, and people are coming in, people come telling you, hey, the chart looks good, it's going to fill the gap, it's going to go here, boom, and it runs. But then at some point in that run, as the computer is drawing in, buying from everywhere, it's like the stock pools of old. The toad starts selling. He sells stock he doesn't own. He colludes and breaks laws up the wazoo, but he sells stock he doesn't own. And in the case of Finger, he might have sold, I don't remember the volumes now, but he could have sold $30, $40 million, $50 million worth of stock at those higher levels that you all were buying, that were, I'm not going to say they were real sales, but they weren't just computers going back and forth. That was commitment to be short, illegally or legally. And then why would he do that? Well, he could go to Roth Capital and say, you know what? We'll buy 20 million shares. Well, that'd be too much. Well, let's say he sold 70. Let's use a different number. We'll buy 10 million shares from Finger Motion at $3. It's trading at $4.50. They did this in December. We'll buy it at $3. Well, then he's locked in that profit. He sold all that stock for $4.50. He's locked in that profit. But everything else he sold, the stock comes down to $3. But he gets warrants in there with derivatives. It goes down to $2.25. He's printing money. Printing money. And these guys get you hot. Well, the chart's like, it's hit a bottom. It's all crap. I'm telling you, it's crap. If you want to be lion of all trades, age 29, and at the computer all day, if he really is, that if you want that life, Donna, and now I'm talking to Sada, I don't know any of us that have that time to do that. So Railtown is one stock, one decision, and you can get about your life. You can make the money back that you've lost, and you can get paid incredibly for all the pain we've been going through. That's my opinion. So I want you away from this idea that fingers hit a bottom. So what? Who gives a F? It's hit a bottom. Where were you when it was $5.50, $5, $4.75, $4.50? I was telling people to sell. I don't know what Lion of All Trades was doing. I'm not picking on him. But the point is, why do you even want to be in that? Why? You have to be the hot hand? You can be the slow hand. You can be the cool hand. You can be the calm hand. And when you're sitting, I mean, if I'm right, in Sada's case, if I'm right, and the reason I'm giving these big numbers now is because I feel like Lion is trying to get you to think about not adding to your position and maybe even getting back into the trading. If you want to be a trader, sign in with Lion of All Trades. If you want to make money that changes your account, stay here. But I think Sada has 70,000 shares of Railtown. I'm going to go to this big number because I want you to believe and hope. But just to restate it, my initial target, the only target that I'm making right now, is I think the stock will be $5, $6 over the next 4 weeks, 6 weeks, 8 weeks. And it could happen in a heartbeat. That's a Southern expression for soon. So let's go, Sada, with $5 by, let's say, by the end of the summer. And I think it could be, look, I've heard people musing, which I wouldn't count on. They're just investors like I am, thinking, well, if you do this or that. But the musings out there are that Railtown could be $30 to $85 by the end of the year. Now, I don't want to give you any of those numbers that soon, so I'm going to stretch it out to 18 months to 2 years. However, I'm not going to tell you that's not going to happen either. I'm not telling you that's not going to happen. Railtown is in the hottest space on a macro level because Wall Street is going to raise hundreds of billions of dollars. Hundreds of billions from Goldman Sachs, Morgan Stanley, State Street, Merrill Lynch, Fidelity. They're all going to raise money for AI 2.0. What's the one company that I know about? I'm sure there's many, but the one company I know about who pre-planned, Marwan Haddad and Corey Brandolini pre-planned. Well, we've been through this rodeo. we've done it several times before. We've sold companies, in Corey's instance, to Microsoft, for example. But what did we learn in software development? We learned that there were times when this sucker is going down, when the red lights, the Klingon bells, it's all hands on deck to fix an urgent bug, loop, virus in the software, or everything's for naught. And everything stopped for weeks, money, time, cost. 40% of a developer's time is wasted in non-productive activities. They invented the AI-based little voice on your shoulder assistant that works inside of corporations, not on the whole web. So if you're a sales, I'm making it up, I don't know if they have a relationship, but a Salesforce.com, you buy this, and then it's just inside of Salesforce.com's proprietary database. Nobody else in the world has access to it. Or if it's a realtor company, or if it's, heck, what if this little thing helps Morgan Stanley create an online trading platform that competes with GTIIs? Should you keep GTII at 20 cents? Anybody that owns GTII and hasn't swapped it out for Railtown, I can't believe the gift you're given. I can't believe it. But time might already be up, Sada, which is why I'm grateful that you made your decision. There may be no time left to buy Railtown. On the other hand, there may be. If Railtown is 50, 60 cents on Monday, I'd buy all you can. You already did it. But I would, everybody out there that listens to me, Railtown is a, when I worked on Wall Street, I had clients that did trading, a lot of trading in Bank of America stock, and the stock was $7. That was when everything went crap. And then it was $12, and then it was $20, to my memory, but it was really cheap. And I was being recruited by a competing firm. They were, because back then I was a big producer. Now it wouldn't. Well, maybe it would measure up if you adjusted it for inflation or something, but it wouldn't measure now to what these guys are doing. But I was a, President's Club crap and all that. So they were recruiting me, and he sent me a research report, and I think the analyst, I used to remember the analyst's name back when you had analysts, and the headline was "Buy all you can." BAC, that's the symbol for Bank of America. Buy all you can, the analyst said. Buy all you, and he was right. Bank of America was screaming buy. I can't come up with for RAILF. RAILF. Really accumulate it like F. Really accumulate it like, I can think of a word for F, but Railtown's that right now. Buy all you can. Buy all you can. buy all you can, buy all you can. You don't even have to think. You don't have to hesitate. There might be volatility. If you want to listen to Lion, he doesn't know anything about Railtown. He really doesn't know anything about Finger. He thinks it's hit a base. I mean, this is tech. Look, I've dealt with technicians my whole career, if you call it a career, and they'll call. I used to call up Harry Lobsher, who was one of the best on the street. Why do I say that? Because he called interest rates to a T in big public forums. But I'd call him up, and I'd call him, and he'd go, Lobsher, Lobsher, hello. And I'd say, hey, Harry, this is, I might have said William back then, William Farron from Washington, D.C. Oh, hello, Billy. Hello, Billy. How can I help you out? Well, I'm just wondering how you see, I've got a guy that owns 40,000 shares of Apple, and he wants to trade and sell some calls. How do you see him? Well, let me see. It's a 1, 2, 3, 4, 5, 6. Well, Billy, it counts down to 32. I'd be a buyer at 32, but let's see. If it goes up, you might have 42, 43. So I would, if you're trading it, how's everything else going, Billy? Thanks. That was great. It was very helpful. Meaningless, but it gives you something to tell your client who is trading. I talked to our technical analyst, and this is what he gave me. All right, so why don't we sell the 45 calls against my position? There you go. But Donna and Sada both, do you guys want to be day traders? I don't. Sada could with her 70,000 shares in 18 months. Let's call it 18 months. 18 months. $50. Sada has 3.5 million of stock in her account. She hasn't day traded at all. She's just gone on about her life. It's gone up and down. It's not going to go straight to 50. She's going on about her life. But let's say at that time it gets bought out by AMD. Well, no tax, and she's in a blue chip company. Sada owns NVIDIA. Let's say NVIDIA buys it out. All of a sudden she has stock in NVIDIA and she's comfortable with NVIDIA. She can go on about her life. And she doesn't have to worry about what the bloody charts say. Or in 18 months, I come to you with there's a private deal. I'd love to come to you guys. But the thing is, if it comes this year, I don't want you to sell Railtown, so we'll have to wait till next year. But it's a great, absolutely the best. I've never seen a better oil and gas investment in my life for income and upside in the natural gas space. But if it's paying 12 or 20% per annum, let's just use 8%. She could generate $280,000 a year divided by 12 months, 23 grand a month. And if she did it in with it, and we'll figure it out then, but if she did it in with a mind set on tax consequences, that income might be able to pay some of the tax obligation, or you just do it slowly. But this income per month is more. If you stick with me, the income you can generate eventually, if you want to, per month is more than these stupid trades. Well, it's hit a bottom and it counts back up. There's a gap. It's got to fill the gap at 350. Well, it doesn't have to do any of that shit. What if Xi loses his job and the 160 automobile companies in China, most of them go out of business, and there is no payment on those C2 contracts, and they have to go back to market, and Roth Capital comes to finger motion and says, we'll do it at 75 cents. What if that happens? Oh, that's not going to happen. It's not going to happen. Well, how do you know it's not going to happen? How do you know it's not going to happen? They don't have enough money to make it to the end of the year. Is revenue going to come in from the C2 contract? Are they going to have to cannibalize the money that they use to buy minutes and keep rolling it, or are they going to raise money? Do they have big investors that come in above the market? Maybe, but remember, as the criminals drive the price down, big investors don't think that way. They don't think, oh, I'll pay more. They come in and say, we want a discount. They did it already. They already came in at this last round was at a discount. I forget now. It was at $2.50 when the stock was $3.50 or $4. You can look it up. I don't quite remember. So Donna, ignore the bloody charts. That's what I'm trying to tell you. On Wall Street, there are people that are called technicians. That's what Lion of all trades claims to be. I've probably told this story, but I started at Merrill Lynch and was trained at Merrill Lynch, and they had ongoing training every week that you had to do. And my boss was an ex-Marine. He used to be a White House Marine under, I don't think it was under Reagan, but it was, something like that. And he ended up marrying Don Regan's daughter. Well, Don Regan, who also worked for Reagan ran Merrill Lynch for a while. So this guy was our manager, and he was all into technical, just like everybody that believes technical, they swear by it. And so I back then, I was young and big room full of people. I had a friend, he always stood up. He always could make the whole room laugh, and he had no fear of public speaking. But I once raised my hand. I forget what stock it was. David, how do you see, let's use Apple again. How do you see Apple? Well, let's look. And then he'd take it and he'd draw it up on the board from his chart book. Well, he did a lot of the counting. There's all different techniques. So it's up 1, back 2, 3, 1, and then he said, well, Apple should go to whatever, $45. So great, thanks, David. That's awesome. And then we'd have the meeting a month later, and I'd come in, and in the meantime, the stock actually went to 24, and I raised my hand. After everybody's done, I wait till the end. I would raise my hand. So, could I ask you about Apple Computer? My client bought it at 34, and now it's down at 24. What do you think? And he draw it all up and he say he shouldn't have bought it. That's as useless as technical data is to me. Now, if you have an idea about a stock and why you want to own it, charts can help you with entry points and trading a little bit on the margin, or just giving you confidence. But Railtown's not one of these stocks. If you want to own it, you got to buy it now. And the price might be higher. You got to buy it now. This idiocy about finger motion being at a bottom has nothing to do with the decision to buy Railtown. Because finger hits a bottom doesn't mean anything in the time frame that Railtown is about to announce that they've finished their acquisition and the price gets repriced. Then you can come back to finger to your heart's content, and you can sign up for Lion, and you can listen to chartists until your head explodes. And the one time that you press your bets and you put it all on a chart and the chart doesn't work, Lion will disappear and he'll say, oh, well, you know, it's not financial advice. And, you know, look at this other stock, how it's working. Technical analysis is simply a way of trying to measure how the crowd is behaving, how a herd of cattle are running, how a room full of cats in panic are behaving. But when it calms down, the cats all go different ways. When the cattle run out of energy, they start making it drifts. I'm not a big fan of technical indices as being your only method of trading. And what Lion is doing is a disservice to you, because he only does technical. He only does technical. And that's what a lot of people do. They only do technical. They don't want to hear the story. They don't want to hear any fundamental news because it'll affect how they're reading it. But in a bull market, which we've been in now for quite a while, and we've had some runs, and we're about to just have a huge run. And when computers are all signed up with the same analysis, it works. Somewhat. But guess what? They don't tell you. You got to watch it every minute. You got to trade it. You got to have your orders in. And it's a nightmare. It's a nightmare very few of us want to sign up for. It's a prison. You're entrapped by your computer. Some guys like it. I hate it. The last thing I want to do is buy a stock. Well, it's hit a bottom. All right, it's hit a bottom. How long is it going to be at the bottom? Well, the chart doesn't say that. It doesn't really. And could it go lower? Oh, sure, it could go lower. What if it goes lower? Where's that bottom? Well, it's actually $1.50. Well, isn't that 25% lower? Yeah, but you know what? The bottom of the bottom of the chart's coming up. It can't go any lower than that. It's all crap, I'm telling you. I use it because sometimes it helps make short-term predictions, long-term predictions. But I'm not telling you about Railtown because of technical indications. I'm not telling you that you should sit around and wait for finger motion to bottom and then rally, and you can always add to your position of Railtown later. Railtown's going to be $5. Railtown will be $5 in the next days or weeks. And you're going to wait for finger motion to bottom because somebody sees it on a chart? The next thing, in the next 3 days of activity in that chart, he'll see something else. I'm not picking on him. I've just dealt with technicians my whole life. I used to go up, and one technician, he spent his whole career, he had a wall going from from the 60s. He had the chart of the Dow going all around the conference table, down the hall, and around the trading room. I guess it was the trading room, the research room. It's like, what the hell? You waste your life doing this. Some guys do like doing that. I don't. Railtown is a fundamental story. I'll show you some charts why I see it this way. Mixing and matching your thinking so that you hesitate to sell finger motion because someone says it's hit a bottom. I can't help you. Donna, I think you should. Now, the problem is, I have to give a caveat. If Railtown's 50 cents, 60 cents, whatever it is, Monday morning, I'd sell finger and buy, I can't give you financial advice, and buy Railtown. But it's always possible that Monday morning Railtown announces, I don't know how they're going to handle it, but maybe they announce that deal with shareholder approval. But once they announce it, it's possible the stock's at $3. I just don't know. And there's no technical reading that can show it. All I can tell you, if you're futzing around with technical information on Finger already had its run this year. No one listened to me. I didn't need Line of All Trades to tell me. I don't think he told you to sell at 5 or at 4 or 450 or 350. I did. Anyway, let me move on. What's your average in general? Donna, what's your average in Finger, Donna? Cool, man, cool. You're going to have a trade. It's bottom now. Screw it. If you want to listen to Line of All Trades, sell all your Railtown and go trade with him. That's a good point Lion has here. And I'm not picking on him personally. I'm just picking on the technical, the whole science, the quasi-science of technical analysis. That's what I'm getting frustrated with. And I'm getting frustrated with the hesitation because I think it might already be too late. So, if you're gonna do it, you could have sold Finger Motion at 350 and gotten into Railtown at I don't know 30 cents. But that's gone. We don't have that option anymore. We just have what is tomorrow morning. And I think it's going to open up because it's up. It was 51 cents. But if we're lucky, it's still 50 cents, 49 cents, 48 cents tomorrow morning. To Donna, I'm saying this, in a heartbeat, I would liquidate and buy Railtown. At these prices, I just can't speak more strongly about it. But I wouldn't worry about what the chart is doing on Finger to make that decision. I would accept, you know what, I'm selling Finger at 2. And who knows, in the next six weeks, it could go to 3. Darn it. That's what happens. It can't be everywhere. But Railtown could go to 5 in those same 3 weeks. And I'm not saying it because I don't believe it. I'm not saying it because I'm pulling it out of thin air. I'm not saying it because, a rumor is coming from Morgan Stanley or that there's going to be a distribution of a warrant as a dividend. We've gone through all of that. Anyway, let me move on. I don't know why I'm getting so concerned. I'm going to turn the air conditioning on for a section. Okay, that's an important point. That's his expertise, and I think you have to know that. In his opinion, Finger has found a bottom and holding above the 20 day, the 200 day, sorry, moving average. Maybe I don't want to show the chart. Well, we can look at the chart again. I'm not 100% convinced. I don't have the moving averages in there. I don't have the moving averages in there. Frankly, I don't know how to put them on there. But I agree with Lion that $2, and I've said it before, because you can look to the left of the chart. $2 was support clearly for a long, long time until Ross Capital did a deal. It was $2.80, and they did it at $1.50. It gapped down and tried to get below $1, and then $1.25 was support for a long time, and it drifted up maybe to $1.30 a little bit, and then it rallied. Now you can argue that that gap was already filled on that rally. I do not have the skill Lion has at charts, but to me, that gap represents risk as well. And I could see Finger Motion going to $1.50, going to $1.25. And I think that risk is real. On the other hand, I told you, I don't know, 2 weeks ago, 3 weeks ago, when I saw that declining wedge, that was bullish, and you could see a rally. I'm completely perplexed by the sideways motion. It broke out of that downward wedge. So either the wedge doesn't exist, or when it broke out, it just fizzled. Or maybe it's trying to create another one. You're trying to look for times when the selling becomes exhausted, or there's a capitulation, and then you get a snapback rally. But I think all you're hoping for in Finger right now is a snapback rally, which to me, this chart doesn't say it's going to happen. And I think Lion is being, and the one thing is I don't have the 200-day moving average on here. I think Lion is being interpretive, and I certainly think the $2 level has a long history of support, but it can go lower. And since that $2 level was created before, the stock spent 1, 2, 3, 4, 5 months. Is that months, those boxes? 6 months under $2. So 7 months even. I'm not as confident as Lion is that this is the bottom. I would say I hope $2 is the bottom. I am not confident it's the bottom. I would say right now it's 50-50 that this stock goes up or down. And that's what I've said for the last 2 or 3 weeks. I think by September 1, Finger Motion could be $2 a share, plus 50 cents, minus 50 cents. I'm telling you, I think Railtown September 1 is going to be $5 or $6. Now, there's got to be a plus or minus there too. How wide of a plus or minus, I don't know. All right, I'm going to move on. Sorry, Stan. In one of your talks, did you mention Constellation Software related? Yes, I did. Yes. Stan, I did. Let me see if I can find, I downloaded, or I took a photograph of a brief, it's just 2 pages, if I can find it, of an analyst's summary of Constellation Software, and it's quite powerful, if I can find it. Because it was a while ago, so I might have to try to do it again. All right, so let me just Google it again. I don't spell very well. Constellation Software. Okay. And let me go here. If I'm lucky, it'll stand out what I copied now. All right, let me go to the next page. All right, let's just hit this NASDAQ article. March 12th, 2025. Constellation, you can find it on NASDAQ's website. Constellation Software is an incredible growth stock. 3 reasons why. Let's see. It's written by Zacks Energy Research. Investors seek growth stocks to capitalize on above average growth, but finding one can be tough. These stocks carry above average risk and more blah, blah, blah. However, it's pretty easy to find cutting edge growth stocks with the help of Zacks. Okay. Our proprietary system. Okay, Zacks is great. All right, I'm going to skip that. It's just a promotion for Zacks. All right, let me put in research. Research. Equity research. I just want to read something to you that I found. Here it is. No, that's not it. Dubbed Canada's Berkshire Hathaway. Yeah. Motley Fool, Canada. 4 reasons to buy Constellation Software stock like there's no tomorrow. Seeking Alpha. Okay, I'll just I can't. Let's see if I can get The Economist. Okay, does it have a paywall? Does it have a paywall? I hope not. So The Economist has a headline, Stan, how a Canadian company became the world's best acquirer of tech firms. Meet Constellation Software. Tech's Berkshire Hathaway. Oh, I can only read a part of it. Darn it. For older startups, these are tough times. The weak recent stock market debuts of ARM, Instacart, Klaviyo, have been tough for venture capital. Data from PitchBook. Anyway, I can't, all I can give you is that much, so I can't give you more. Yahoo, here's why Constellation Software is a no-brainer stock. Let's see if I can read this one. Mark Leonard. Oh, okay, if I can read it. I think I can read this one. So November 15th, 2023, CityWire put out an article how Canada's Warren Buffett has delivered a 23,000% return. Mark Leonard, that's the CEO of Constellation, the reclusive founder of Canada's Constellation Software, has achieved huge returns for shareholders thanks to a capital allocation strategy which has drawn comparisons with Warren Buffett. Whether managing a business or an investment portfolio, success boils down to the effectiveness of capital allocation. Allocating capital to high return opportunities is the engine which powers compounding, the money-making magic that over time creates vast fortunes and was famously described by Albert Einstein as the eighth wonder of the world. Few allocate capital as effectively as Mark Leonard, the founder of Constellation Software, CA, Canadian, the symbol is CSU. The proof is in the returns. An investor who purchased 10,000 of Constellation Software when it floated on the Toronto Stock Exchange in the spring of 2006 and reinvested dividends would now be sat on almost $2.3 million 17 years later. And they give the chart. Of Constellation Software. And if you're following technicians, you would have been shaken out of that stock or gone into something else. Okay, so among the shareholders, I don't know, Will Kenny, James Clark, Peter Rudder, fund managers, elite investors in the Royal London Global Equity Select Fund. And then they later added the shares to their Royal London Global Equity Diversified Fund. They use limited amount of debt, according to him, and they have an aversion to issuing new shares. Before setting up Constellation, Leonard worked in the venture capital industry. While doing so, he discovered that few businesses could match the attractions of small niche-focused software businesses, or as he calls it, vertical market software, VMS, business in corporate speak. These types of companies often have an oligopoly or a monopoly position because their markets are too small to accommodate rivals. Meanwhile, the business critical nature of their products and the difficulty of switching to rival software fosters lifelong customers and reliable revenues. Because of these factors and the relatively minor expense software tends to represent for customers, these VMS, vertical market software businesses, normally have formidable pricing power. While acquirers normally have to pay for such qualities, this area is something of an exception. I don't think that's true in the AI space, but anyway, the diminutive size of many of these companies limits competition to acquire them. That means Constellation has historically been able to pick up these type of businesses at prices which allow the company to meet IRR, internal rate of return, hurdle rates. Its strategy is distinct because it buys companies to hold forever. Let's skip some of this. Let's skip. A glaring question about this model is how to deploy a strategy at scale that's based on doing tiny deals that are often only a few million a pop. As Constellation has grown, it's found the answer in decentralization, giving ever more autonomy to its business units. After the first 10 years in business, top management found the job of doing deals had become too big for its sparingly staffed head office. So they developed a number of operating units. To fuel its acquisition machine, Constellation sources deal leads on an industrial scale. Its database has 50,000 potential targets. Wow. They pay special dividends and so on. All right, so that's, Stan, that's Constellation Software, but let me tell you a couple of things I understand about it. And I probably already got rid of this guy's picture. Like an idiot. I probably already did it. I probably already did it. Like an idiot. Yeah, I did. So I can't show it to you. But AI Partners, one of the initial investors or he directed investors to it is this guy, Mark Ruffalo. Let me see if I can find his picture. This way. Here he is. This guy is on AI Partners. I can't quite read that. But that's the guy, John Ruffalo. Let me just read it to you. John Ruffalo is the founder and managing partner of Mavericks Private Equity. He is the founder of OMERS, Ontario Municipal Employee Retirement System Ventures, an organization which he ran for 8 years. OMERS Ventures is the venture capital arm of the OMERS Pension Fund. During his leadership, OMERS Ventures invested over $500 million of capital in 40 disruptive technology companies across North America. Shopify, Hootsuite, Desire to Learn, Hopper, Wattpad, League, and so on. The founder, all right, let me go to AI Partners. AI Partnerships Corp. Its AIPartnershiPsCorp.com. They're a global affiliate network of 160 plus AI solution providers. We provide AI-based product solutions to businesses. Our affiliate network strength, I'm on their website, 160 companies providing AI-enabled products and services. Focus on key industrial sectors and sector-agnostic AI products for all businesses. Presence in over a dozen countries. Over 1,500 clients served worldwide by our affiliates. The challenge. All right, there's a challenge. I get it. I get it. I get it. It's hard to show you this, but they have AI for manufacturing, and it covers product engineering, demand forecasting, chip yield and throughput, image recognition, defect detection, quality inspection, HVAC maintenance, manufacturing insights, asset management, health and safety. That's across these 160 companies. They have construction, BOM planning, hazard and risk management, LIDAR systems, telecommunications, 5G and telemedicine tech, big data analytics, smart city conductivity. They have fintech. So they have fund sales and retention, process optimization, collateral optimization, custom built fintech solutions, data extraction, revenue integrity, risk and compliance, credit assessment, investment strategies, financial reporting, smart contracts, social investing, financial reporting, predictive analytics, AUG growth, fraud detection, and some of these they subdivide as well. Healthcare, physician assistance, speech and image analysis, smart peer research, health intelligence, chronic care, automatic scheduling, digital transformation, mental health analytics. I'll look that up. Disease detection, risk management, retail, customer acquisition, customer retention, customer experience, decision intelligence, product promotion, search engines, chatbots and virtual assistants, geospatial analytics, customer journey mapping, conversational insight, sales and MarTech, video transcripting, cognitive AI marketing, smart CRM CX, sales insights and analytics, personalized videos at scale, research and writing, journalism databases, conversion tracking, investment strategies, influencer marketing, HR, workflow automation, recruiting, fractional AI teams, virtual training, security and privacy, cyber exploitations, risk and threat detection, PLL redaction, data governance, AI consulting services, custom-built solutions, unique business problems or needs, strategy and leadership, business process management, custom machine learning, knowledge discovery, AI simulation systems, process engineering, AI mobile deployment, big data analytics, labeling and annotation, decision support systems, computer vision technology, predictive analytics, AR, VR, 3D application, developer tools, ML ops platforms, DevOps platforms, synthetic data, source AI, ML, NLP models, annotation and automation, NLP toolkits, knowledge exchange, training data, cloud services, ML cloud computing, private cloud, performance computing, AI cloud solutions, ERP as a service. Okay, so those are their list of all the areas they help through the 160 plus companies. Now, let me ask you something, Stan. These guys, maybe I didn't show you that yet. I got to show you that first. Okay, here's the founder of AI Partners, Michael Nodridge. He's the founder. Let me read it to you. It's Nobrega, founder of AIP Partners. Michael Nobrega is the former president and CEO of the Ontario Municipal Employees Retirement System, OMERS, one of Canada's largest pension funds with more than $100 billion in assets under management. He previously served as president and CEO of OMERS' wholly owned subsidiary, Borealis Infrastructure Management, Inc. The next guy, Dr. Tom Carr. Dr. Tom Core. He's one of the founders of AI Partners. He's the former president and CEO of Ontario Centers of Excellence for 10 years. Previously held the joint position of president and CEO of the Accelerator Center at Waterloo Research and Technology Park. And he was the vice president of commercialization at the University of Waterloo. And then Patrick Horgan, a long-time lifelong IBM guy, COO of IBM Canada. He was responsible for the implementation of AI and high-performance computer initiatives with the government of Ontario. And then I've read to you John Ruffalo, and then they have a bunch of advisors. I'm not going to go through those. So the question I have, Stan, these guys seem to know what they're doing. There's 160 companies doing all of those AI categories, and in comes Railtown, and they decide to be bought out by Railtown. What is it that Railtown has the rest of these companies didn't have? My opinion, it's Conductor. It's the AI self-learning software development, software fixer, software debugger that aids in all of this on an AI level. And here's Railtown. Here's their companies: Conductor, Railtracks, Langtracks, and Shredder. Whatever Shredder is. And then here's their partners. Currently, these are their partners. To me, these are the natural buyers of the company. But you've got Mila, which is something, Montreal's learning something. Then you've got, or that's AMII. I don't know. Those are two big brainiac think tanks, educational groups. But anyway, you've got Microsoft Partners. You've got the Microsoft Founders Hub, or the co-sell ready. I guess so. There's three parts to Microsoft. You've got UBC, you've got NVIDIA, you've got AMD, and then down there you've got AI Partners. AI Partnerships Corporation. So what does Conductor do? Conductor is the DPE for the next generation of software development. I don't know what, oh, here it is. The first end-to-end, so it's first to market, the first end-to-end developer productivity engineering platform for the entire team. With the power of Conductor, you can keep your developers all the way left, all the way to the time. I don't know what it means. The Conductor IDE plugin pushes the root cause analyst right where the developer is working alongside the code within the developer environment, providing details about the lines of code that are causing error in steps and then giving steps to address the issue. Conductor will help the rest of your team stay all the way to the right, informed and engaged with automated documentation about technical debt, progress notes, stand-up notes, developer velocity, best practices, root cause discovery, and reporting. Lang tracks. Native, this is improve agentic workflows with request completion. Native LangTrax tools often lead to unnecessary complexity and rigidity. Facing these challenges, we created a new framework, request completion, RC. RC simplifies the creation dynamic, input-driven workflows with a node-based architecture tailored for flexibility and scalability. In RC, nodes are defined with clear input and output parameters, each capable of invoking others to build modular, interconnected workflows. What sets RC apart is its approach to decision-making. Each node determines its subsequent actions internally, eliminating the need for an external control flow layer. Beyond its architectural innovations, RC includes robust features to streamline development, including integrated debugging tools, comprehensive error handling, real-time streaming of intermediate outputs, and automatic parallelization to handle complex workflows efficiently. RC is a direct substitute for LangGraph, designed to natively support dynamic evolving workflows without the friction. Explore its features to see how RC can improve your engineering process. Railtracks, a better RAG application. Connect external data to LLMs, no matter the source, using Railtown's universal retrieval engine for LLMs to access unstructured data from any source. It's like a translator. Build RAG applications on your user data. Railtown's universal retrieval engine has pre-built connectors to ingest unstructured data from any source and load it into any destination. Railtown ingestion pipeline allows developers to send data by event or in batch format and allows the team to run multiple cleaning and transformation steps to the data before it is saved in a unified database structure that will allow the team to interact and create RAG applications and automations on top of the data. Finally, Shredder. This is disrupting the SR and ED claim consulting market. Stop giving away 20 to 40% of your SRED credits to consultants. No need to spend weeks researching and preparing your SRED report. Shredder will handle what would normally take weeks to do in just a matter of minutes. Save your time and keep your money. All right, then this is one of their markets on their website. By 2031, expected to be 17 billion. That's the global developer tools market. And then the global AI as a service market by the end of this decade is expected to grow to $132 billion. $132 billion. So one is 17 and one market they're going after, and the other is 130 billion. And I'm not going to read the rest, but the founders, four of them, they're successful tech business builders. Together they have founded 6 tech startups, and they've executed 4 merger and M&A exits. And that's what's ahead of us. Looking at Brandolini, the guy in charge, and he puts his co-founder first. I like that. 30 years of experience in software development companies, founding and investing. 20 years in investment banking, and he was a former partner of Telio, which was acquired by Microsoft. And then Marwan Haddad, similar 25 years, and he sold a company to somebody. He's led development effort and teams, launched several platforms for Fortune 500 companies, including Microsoft, Starbucks. But he did this RESAAS, which I think was sold to Keller Williams, if I'm not mistaken. Anyway, let's not go over too much of that. So my question, Stan, is why did they merge with this company? And I think it's because AIP, Railtown stands out ahead of all the rest. So they're going to emulate, I believe, the Constellation Software model. And they've got 165 companies just sitting right there to roll up. It's in their press releases. All right, I gotta get the news stories. I forgot, I totally lost track of what I was telling you. So anyway, February 11th, they announced the MOU to acquire AI partnerships. I'm not going to read the whole thing. May 5th, they went to another conference. May the 21st, they launched powerful Visual Studio extension to supercharge developer productivity. That's another product they announced last month. Then they announced that they were going to present that LangTrax, which I just read to you, at a conference, which they did. Then on June 2nd, they commercialized LangTrax and Railtrax. It says Railtown Technologies announces commercialization of groundbreaking developer frameworks, LangTrax and Railtrax. And then June 9th, they announced a strategic partnership with ESG AI Technologies. This is an AI group that helps everybody stay woke, as BlackRock wants them to be. But one of their customers is the London Stock Exchange. That's revenue. And then on June 18th, Railtown announced a strategic partnership with Quantum.IQ and a private placement which we've discussed. But there's 2 revenue deals already announced. They just haven't given us the revenue. While we're waiting, it's exciting. So anyway, Stan, I think they're going to use the same model as Constellation Software. I don't think they're going to have, thousands of companies in their database. They're just going to start with that 160 they already have. And they've already added 2, which I don't think are part of that database. So, and these guys, the Mavericks and Omers, imagine their Rolodex and their deal flow. Just imagine it. So I think it's going to be very exciting. I saw with Constellation Software that it only has 20 million shares outstanding. So it does all these acquisitions without issuing a lot of stock. I'm sure they're going to use that model. I just don't know what it is. We'll find out. But no, you don't misremember. It's very exciting. I think let me give you another reason why it's exciting, Stan. Any of the investors who came in years ago, a decade ago, 13 years ago on the IPO, who are in Constellation Software, and they know John Ruffalo, they know Omers, they know this space, I would think they'd be natural investors here. So it really is exciting. Sorry to take so long on that answer. You're great. All right, so that's always a risk I have, and it's my own weakness. I'm not picking on Lions specifically. I'm just saying that the structure we've been in for the last 3 or 4 years has been this space calls, technological guys, people coming on with advice for you because they care. Really, Bill, I do care. Yes. Anyway, that's another story. Let's not get distracted. It's the whole pattern that I want us to break out of. So I'm not picking on Lion. It's the idea, and Lion's probably not doing it, but other people have come in and are doing it. They want you, and Lion said it the other day. If it goes to $5, that'll be a win for retail. I don't think he thought through. I think maybe he really means that would be a win. But I don't want you thinking that way. I don't want you thinking, we won at $5. $5 is going to be the starting point, or $6 or $7, whatever the heck it is. It's so hard. I've got some examples to go through. We'll go through together. But it's just so hard to explain to you what I mean, but I've seen it before. The starting point on this investment is not 50 cents. It's probably $5, $6, $7. And you're going to say, well, how can you say that? I believe Railtown is mispriced. I think in the span of last year, when I brought it out to you under the guise of Funky Town, to now, things have changed dramatically. But even in the AI partners, things have changed. And that was announced in the beginning of February. So in the 4 months, it's a light year in the AI space. And I lost my. I have a pain. Anyway, I lost my train of thought. It's a light year in that space. Anyway, my point is that a lot of good things have happened with Railtown, but also with AI partners. So the valuation has leapt to a new starting point. And as long as the stock is in its restricted period, none of the buyers have been able to come in and with their vote, with their money, start to create price discovery that's real. This price is the wrong price. The real buyers can't buy. That's my opinion. Now, obviously, if you want to hold me to everything in its exact meaning, I don't mean it that way. I'm taking broad liberty with projections, which you have to give wide ranges on. But I do believe that I'm right. So anyway, when RLAIF, but I think when Railtown goes to, let's say, $6, now that it's going to probably be 60 cents, $5, it's still 50 cents. Let's use $5. That, I don't want that to be the win. I want you to feel like, wow, I really am in something good. And a lot of the people on the Twitter spaces and in the calls will want you to sell out so you can go invest with the not genius, or you can go invest with the not so smart Jeremy Frommer. Smart is as smart does. Or you can go invest with they want you to move your money because they don't have, they're so lazy. They don't want to go out. They don't know how to go out and get money. It's a tough job getting money. Lots of rejection. It's much easier to come here. They're going to want to siphon it off. If this is up, they're going to say, wow, these guys have 5 million shares, 5.5 million shares, and it's at $10. Let's go get that money for Genius Brands, the guy with 3 first names, because he's got a British accent, mate. I just don't want you thinking, this isn't hot money. I don't want you thinking, oh, it's a win. It's my fight against the shorts. Big lie, big misrepresentation. Just drives me crazy. Drives me crazy. All right, let's keep going. I've felt like a day trader the last 3 years. Okay. I'm going to write some of that down just for my future memory, Donna. I own MMTLP, so do I. GTII, so do I. And I don't think I can, but I'm going to see if I can sell it tomorrow. And GBUX. And 12K finger. Well, I'm going to move on, but that's a lot. You sit down with a pad of paper. You may not have, and I commend you, I congratulate you for already buying Railtown. You may not have time Monday, Tuesday, Wednesday, or next week, or we do have time. But I know what I'd do with those 2 positions. If I haven't been clear, now is the time to concentrate your account. That's my opinion. Other people have advice you should never just be in one thing. And I do caution with Railtown, as I've already shown you, I was convinced it had to be June. And now I think it has to be July. I could be wrong. But one of these days, it's going to happen. And then 40 cents, 50 cents, 60 cents is just in the mists of time, you know. So I know what I would do, Donna, but you said sit down. You don't have to do it tonight. You can do it first thing in the morning. And if you want to, you can wait until you see how Railtown trades. I feel massive urgency, and I think I'm expressing that with my voice going up and with my I just think it's so urgent to own Railtown. And if you miss out for some reason, let's say it's tomorrow or it's Friday or it's next week, and you haven't finished, well, we'll see what happens. I actually think the stock, Donna, I think Railtown's a buy all the way up to 10, even maybe $15. But it's just you have to change your horizons, and then there's more volatility. But anyway, let me move on. Never on a Sunday, a Sunday, a Sunday. Never on a, I can't remember the song. Hey, June. You're on this channel quite a bit, and you did recommend HNRC, and you do come on to say you're live and all that. Don't gaslight me. But you're welcome. I haven't ever cut you off, and I think people should understand what I'm trying to do. It was 3 years ago, Lion. Maybe there was another person named Lion. It could be, but it was 3 years ago. It was going to have a dividend, and you were all hot and bothered about it. But I don't want to get distracted. That's fine. Maybe there's somebody else named Lion. But you came on over and over again to say it over and over again. All right. Thank you for stopping by. Okay, guys, I just don't want to get distracted by all that. If you want to fall in love with Lion and make it a thing between Lion and me, just go over to his site. I don't have time for it. He's a good man. He's great. Everything he does is perfect, and I'm the asshole. I think you're going to be faced with a quandary over the next week or two. If you're lucky, tomorrow, the next day, you can buy the stock and continue to accumulate. But I think you're going to find that one of these days, it's going to open up higher, and you're going, shoot, I wanted to buy it. And this is not a situation like the trading stocks where, I'll let it pull. This, we'll monitor it. We'll see what the news is. But if Railtown goes to 60 cents, then to 80 cents, then to $1.20, it's still a buy. Because it's almost any number that in this early stage of the stock, I can project a 10x. It just gets riskier and it gets longer. It's more time. Sorry, just tired. So, all right, let me just go through I'm going to take this down. Thank you, June. I'm going to take this down and just show you some I copied a bunch of them, and I'm just going to show you. This is a chart of a technology company's value. On the lower axis is time, and on the vertical axis is performance and the value of offerings. So you'll see at the left-hand corner, incubation. Now, I would say that you are currently buying Railtown at the incubation price. Now, it was 5-6 years. I don't know, $10 million roughly, it looks like. And they created their products early because they wanted to be ready for when AI became feasible. And what made it AI 2.0, what makes it feasible are the data centers, the NVIDIA chips, or whatever they're called, these big, huge, powerful processing items that NVIDIA sells. And the combination of the two makes the processing of data feasible. So then you have growth, then you have maturity, and up there they have decline. Okay, that's a typical technology. There's decline. They don't tell how much time is involved. But my point is you're buying at the incubation price, and the stock should be somewhat up that growth curve, not all the way, but meaningfully up there, in my judgment. I'm going to take that one down just so I don't replay the same ones all the time. What's this? All right, that we already talked about. Let's see this. Here's another, this is another chart. So the lower corner, it says ferment. In the bottom axis, the horizontal axis, research and development effort. Along the vertical, performance of innovation. And the curve is influenced by the underlying technology core. Well, I don't know what they're referring to here. This is just a chart on Google. But anyway, you have the fermenting period, and then you have takeoff. We're still buying at a price that's in that fermentation period, and we should be up. I believe the stock price should be up. That takeoff, I don't know what to call this curve, S-curve. And that's what I think's coming right ahead of you. Let's just see what other one I got here. What's this? Oh, I already showed you that. Here's another attempt at this same concept. Time on the horizontal, growth on the vertical. So you see the early phase down in the left-hand basement corner. And let me take this off so I can read it for now. I'll put it back on. But in the lower thing, it's very hard for me to read. Let me see if I can read it on my phone. Yeah, I can't even find it. Well, anyway, I can't find it, so we'll go with it. Maybe I have it right here. I think it says on the bottom, finding product market. I can't read it. Anyway, we can guess what the early phase is. And now we're in the growth phase. And so I believe you're buying Railtown at early phase prices because of the restriction on the stock trading whilst it's in merger discussions. As soon as that's finalized, I think because of Railtown's organic growth and because of its acquisition of AI partners, 160 companies that have growth, I think you're going to find that the price leaps up that growth trajectory valuation. And it could be a significant leap out of the gate. Now, out of the gate could be a matter of hours, it could be a matter of days, it could be a matter of weeks, or I suppose 2 or 3 months. I think it's going to happen very quickly because of my opinion, pent-up demand and the oncoming flood of capital from Wall Street. And then we get into the hyper growth phase. And that's what's going to be really exciting. And I just have a feeling that you're not going to want to sell this stock once you're in it. Now, let me take that off. What's this one? Innovation is the driver down in the corner. Growth is the outcome. This is the S-curve industry life cycle. I can't read any of that other stuff. So in the bottom, it's innovation-focused managers with flexibility and long-term focus are earlier on the S-curve. And then growth managers come in choosing growth in the middle, and then financial guys come at the top to, sell the company and put their green shades on. Let's see what this one is. So here in the left-hand corner, times on the horizontal, values on the vertical. You have an idea. That's Marwan and Corey meeting at a bar for a drink. And then the initial enthusiasm is high. They raised money. I would argue they probably raised money, maybe not higher than what we're paying now, but they probably went through a period of time where they raised money at a high price. There was a delay. There were disappointments. And the stock comes down. Investors are tired. It's called, I've seen this term before, the valley of death. And it's just massive disappointment. But then I think now we're still buying as the stock price is coming out of that pause over the last 5 years of private. But we're about to see this almost straight up in value happen. Now, here's the reason I put this chart here. It discusses irrational exuberance. That could happen here. That could happen in the whole AI market. I think we're a long way from it. I think that vertical there above the valley of death could be 18 months or longer. So I don't think we're anywhere near that peak, although the overall stock market, we'll find out. And then if there's a sell-off, the disillusionment happens again. And then you slowly climb back up and you have a real company, real value. I think you saw this in companies like Facebook and Amazon. The only thing is the real company, real value line actually happened much higher than that peak. Let me take this off so I don't play it again, Sam. What's this one? All right, so your fermentation of the idea is down in the corner. Then you're in the early adopters. That's where I think we are. I think we're in that transition from innovators to early adopters. And then you take off. You take off. Now they have the standard deviation curve because many companies go through that. But I think we're in one of these S curves where it takes off and runs. I think that maturity is probably should be higher up the curve. But the point of this chart to me is you're not buying when the idea was brand new. You're not buying when you have to wait 6 years. You're buying sort of at that innovators / early adopters price. Still a low price. Probably not even in the early adopters. Probably just slightly in the innovators price range. And you don't have to wait. And I think the leap is going to be, let's say, to the top of that early adopter part on the S curve. And then we start there, headed higher. And that's why I'm being so adamant. This chart you've already seen. This is another way of phrasing it. And I've seen this happen so many times. The initial enthusiasm, reality check, lack of traction, investors' opportunity cost, they get out, the management doesn't know what they're doing, then there's a little bit of execution, and then it comes back down again, and then they start their funding. Do you see what you're missing? You're missing all of that. You're missing the initial enthusiasm, which you might have overpaid. You're missing the gut check timeframes. You're missing the quarter after quarter after quarter of just people talking to each other and no one interest. And you're missing some of the maybe opportunity costs or the frustration. But all of a sudden now, you have the execution. It's starting upward. And the skills, networks, and funding part is just starting. But notice it's upward. And what I think, if you see that squiggly line, I think we're in one of the bottoms of one of those 3 troughs. I don't know, it doesn't matter which one. And when we come out of the MOU, we'll be right at least at the smooth part of that growth and scale curve, if not higher up, that growth and scale curve. So you're able to buy Railtown without all that waiting. And if you have to pay $1, you didn't have to do all that waiting. But you've got that curve ahead of you. And it's a path to sustainability. I love that chart because it explains it better. Here's another chart doing the same thing. So the blue line is maybe current AI or current software. The red line, you could say, is AI 2.0. And at first, nobody notices it. And then time goes by, and everyone's happy, okay, with the existing software. But then there's an inflection point. And we cross, and then you have this S curve. And they call it faint signals with lots of noise. Emergence as a validated model. We're probably right there. That's probably exactly where we are right now. And then critical mass of adoption is achieved. You're halfway up the value curve. And then you have decisive impact at scale, and you're mature. And you're buying right now so early in this. And here again, you saw that already. Thanks God. Thanks good. All right. Why didn't that come down? Why didn't that come down? Oh, why didn't that come down? See what this one is. Why don't we take that one off? There we go. Okay, comments. Okay, Aquaseptic. Well, that's all right. I actually came on today live because I don't know how to edit. And I know it's probably going to go longer than people want, but I expect people to watch it afterward. So you don't have to watch it now. I'm glad you came here. Yeah, all the patriots. It's funny when you don't have all the politicians talking, everybody mixes well, and everyone's calm, and everyone loves America. Okay, so I showed you where we are. Let me see if I had anything else on my list. Let me see if I can show you something, and maybe I can take a short break if I can find it. Very short. I won't leave you. Don't leave me this way. There's something inside I can't hide. Don't leave me this way. All right, that is not it. Okay, here, this is it.
What is taught in modern?
All right, I'm going to put this on for a little while I go. If it's not too much information, I gots to pee. I'll be right back. Try to listen to this if you can.
Corporate finance courses is twaddle.
Do you want to elaborate on that, Charlie? 3 wonderful businesses is more than you need in this life to do very well. And the average person isn't going to run into that. I mean, if you look at how the fortunes were built in this country, they weren't built out of a portfolio of 50 companies. They were built by someone who identified with a wonderful business. Coca-Cola is a great example. A lot of fortunes have been built on that. And there aren't 50 Coca-Colas. There aren't 20. If there were, it'd be fine. We could all go out and diversify like crazy among that group and get results that would be equal to owning the really wonderful one. But you're not going to find it. And the truth is you don't need it. I mean, if you have a really wonderful business is very well protected against the vicissitudes of the economy over time and the competition. I mean, we're talking about businesses that are resistant to effective competition. And 3 of those will be better than 100 average businesses. And they'll be safer, incidentally. I mean, there is less risk in owning 3 easy to identify wonderful businesses than there is in owning 50 well-known big businesses. And it's amazing what has been taught over the years in finance classes about that. But I can assure you that I would rather pick, if I had to bet the next 30 years on the fortunes of my family that would be dependent upon the income from a given group of businesses, I would rather pick 3 businesses from those we own than own a diversified group of 50. Charlie?
Yeah, what he's saying is that what is taught in modern corporate finance courses is twaddle. You cannot believe this stuff. I mean, it's modern portfolio theory, and
it has no utility. But I mean, it will tell you how to do average. But I think anybody can figure out how to do average in fifth grade. I mean, it's just not that difficult. It's elaborate, and there's lots of little Greek letters and all kinds of things to make you feel that you're in the big leagues. But there is no value added.
I have great difficulty with it because I am something of a student of dementia, and I have.
We hang around a lot together.
I can ordinarily classify dementia, on some theory structure of models, but the modern portfolio theory, it involves a type of dementia I just can't even classify. Something very strange is going on.
If you find three wonderful businesses in your life, you'll get very rich. And if you understand them, bad things aren't going to happen to those three. I mean, that's the characteristic of it.
By the way, maybe that's the reason there's so much dementia. If you believe what Warren said, you could teach the whole course in about a week.
All right. Believe that. You can find that on. YouTube. I don't know. I didn't see any of your comments. Oh, I got to turn this back on. I see. Maybe that's what you meant. I turned it off just so I could show those charts. So I like what Warren Buffett says there, that if you diversify or you do all this stuff they talk about, you can do average. My point down in with these stocks is if you're taking the risk anyway, why do average? Because you can lose your money. Why not try to do really well? And I think that's where we are with Railtown. Just to remind everyone, we're at 5466427. And if anyone hasn't told me what they have and want to, I'll add it for tomorrow. There's a bigger issue, which we don't have to get all into now, that I want to express. I think the stock market, as I've been saying for months, is going to make incredible new highs. And my targets that I gave, the S&P 8,500, the Dow 65,000, NASDAQ 30,000, the Russell 4,000. Now, it might not go that high, but I'm going high because I think it is going to go high. It's going to be a blow off. It'll be vertical. Gold 5,000, silver 120. I didn't put platinum down. I should have. But anyway, we'll be fine as long as that's going on. Railtown will participate, in my judgment. All the AI stocks will participate. But how quickly that happens, we don't know. We'll find out. It could happen by September. It could happen by January. It could take, until the second quarter of next year. Afterwards, I'm really nervous about what happens. I think the stock market will be like the coyote running off the cliff, and it'll be fine until he looks down, and then it could be bad. So I'm a little nervous about what comes. And then the question is, will Railtown come down in a crash? And I would guess everything will come down when the crash happens, and then there'll be margin called, and then it'll bounce back. So it's just something to be aware of down the road. But we don't have enough information, and I actually think the crash, there's always a chance it won't happen. So one of the problems is the stories will start changing. This time's different. Oh, everything's worked out. Trump's great. The markets are great. We're gonna get resources off of Jupiter's moons. It all gets bull market-ish, and that's when the crash can come. So there's a guy named Hartnett. I forget what his first name is, but Tyler Durden put out an article yesterday called "One Big Beautiful Bubble." One big beautiful bubble. Hartnett warns U.S. debt will exceed 50 trillion by 2032. I think I've been warning that. It's an obvious thing. But anyway, last weekend, when Trump made it abundantly clear that Doge is dead and buried, and any pretense of government cost cutting had been just for show, I'm not sure that's true. There's rescissions coming, but it won't matter. We said that the budget deficit is about to really explode. And I've said that. I've actually said that over the months, year. The president is all about boosting revenue and debt now. So there's a group called One River. They said, Eric Peters said, Trump has decided to go for broke and pump the economy into a boom to grow our way out of debt. So there's a chance that'll work. I don't know, but it could stretch out the time frame we have to worry about a crash. We'll just have to pay attention. And then we have to fight the crowd. We have to fight groupthink. So Eric Peters said he tried to cut spending through peace, but the war in Ukraine is raging on, and now he's got this new taste for B-2s and bunker busters. Bellowed Biggie, chief global strategist for one of Wall Street's too big to fail companies. And he tried to Doge discretionary spending, but that was a bust too. There's not enough discretionary spending to save anything. So it looks like he's going to go for broke and pump this economy into a boom to grow our way out of debt. He's saying, give me everything now, and if there's inflation next year, the Fed can always hike. And if we couldn't get the 30-year yield to hold above 5% with all this crap going on, then why can't the stock market trade at 30 times earnings? Anyway, that's what they wrote before. So he says, fast forward to today, when a holiday shortened flow show note that I don't subscribe for, Bank of America's Michael Hartnett makes the following observation. That's Merrill Lynch. That since Trump, quote, can't cut spending, can't cut defense, can't cut debt, go big with tariffs, so only way they can pay for the one big beautiful bill is with one big beautiful bubble. So the translation is not just more of the same, but much more of the same. How much more? Well, as first noted here, Tyler Durden, Hartnett also reminds us that the big, beautiful bill is set to raise the U.S. debt ceiling by $5 trillion to $41 trillion. That's a hell of an S-curve on our debt, which, as we described a month ago, is hell to pay. It means that the United States debt is set to rise to $43 trillion by the next election. Something I've been saying. This is what's going on. And it doesn't matter who's in office. And to exceed $50 trillion by 2032. Most likely the actual number will be even greater, since the United States will have at least one deficit-busting recession, crisis, pandemic shock before then, which will add an unexpected $10 trillion in incremental debt. Hartnett writes in his most recent Tale of the Tap from Bank of America, he writes that the recent political U-turns on German fiscal, UK benefit spending, US Doge, shows electorates and politicians are never going to vote for lower debt deficits. Government spend as a percentage of GDP is 44% in the UK and 41% in the United States. And it's why asset allocators are so averse to long bonds, not just in the United States, but everywhere, and are slashing US dollar exposure, raising allocation to international markets, hard assets, and digital assets this year, which also explains the monumental shifts in returns for some of the world's key assets. For the first half, the US dollar is down 11%. That's the biggest drop since 1973. While gold is up 26% since 79, and global stocks outside of the United States are up 16%. They've had their best first half since 93. Go global. And while being long the long bond whiffed, the S&P 500 managed to reverse a huge $10 trillion market loss with $11 trillion gain. Another thing that I didn't have the exact numbers, but that's what I said. They go on with fund flows. The reason I wanted to bring that to your attention, though, is this big, beautiful bubble. It could extend upward, but also outward, the crash. And I wanted to just give you some basis for why I say that. We don't have to discuss it today, but I do want you guys looking at not forgetting about silver, but we'll just hold off on that because the big thing is to focus on if you want to, your accumulation of Railtown, if it's possible at these prices the next few days. I forewarn you, I'll be bullish on it even if it's $1 or $2 this year. It's just you won't be able to buy as much or higher. I'm not capping it there. I think I'll leave some of the other points for now. And I think after reading Listener, Rail looks like a long-term hold for me. I think it should be a long-term hold. But you know, the problem is this darn thing, which let me take your comment down. In a way, I'm discouraged by this. This is the short report for Railtown through the middle of last month. They got 40 million shares short. Now, these reports haven't always ended up in anything, but there's a possibility that we're going to face a short. And I was working on it a little bit, account settings. Let me see if my numbers are here. Yeah. I wrote down to myself, will it squeeze? And I had this chart here using the Fibonacci numbers. For lack of a better system, when a stock makes new highs in a squeeze, I have no idea. Some people know technical analysis better than I do, and the Fibonacci numbers and other retracement number. I have no idea, so I often use the Fibonacci as targets, not in a technical way, just using the numbers as a target, and then the other numbers are round numbers. But anyway, I asked myself this question: if it squeezes, should it be sold? When do you sell it? And it's very hard. We don't have the information yet. So I hope we get information before anything happens. But account settings, I could see it not making sense. If it's squeezed to 1 or 2 or 3 or 5 or 8, I think if you sell it hoping for a pullback, you might never get in it again. I feel that same way about 13 and 21, but others might disagree with me there. And then you go to 34. I don't know. All of those numbers, I think institutions are going to be willing to pay. And then the big one is, what about 55? I don't know. And then 89, I'm not even sure. But if it runs over 100, 140, up in the dreamland, of course, that might cause us to do something. So let's see what happens. When do I think it'll be happening? I don't know what your question means. I don't think this is a one-day call. But if when are they going to finalize the memorandum of understanding and announce it? I think it could be any day. I thought that all of June. So bear that in mind. But the thing is, after they do announce it, there's no more time. So it could be tomorrow, but it could be next Monday. It could be, September 1st. But I think it's going to be any day on that. In terms of price movement, if they announce the MOU is completed, it's a finalized agreement, I think it's then going to depend on whether the larger buyers decide to wait until after the shareholder approval. So you could have that move that I'm calling for let's say into the low teens, that could get stretched out to not even start happening. And then you have weeks after that until the shareholder vote, which would be 40 days later. That's one scenario. What I think is going to happen is once it's announced, a lot of buyers are going to come in. And I don't think it's going to go up slowly. So I would guess as soon as some agreement is announced, the stock could go to $2. $1.50, $2, $2.50. And remember, there's probably going to be pressure particularly by Canaccord, because that's what they do for a living, to raise some money at some point to get a fee to participate. I don't know what price. I don't think it'd be a big deal. I don't think it'd be a lot of stock. So anyway, I think that move could happen, Lawrence, within a matter of days. So let's say they announced that they got the MOU finished, finito, on July 15th, next week. If they announced it on July 15th, I'd say by July 18th, it could be $2. And then it'll just depend on how the bigger people can come in. But I would expect it's entirely possible that the stock by August 15th is between $5 and $10 a share. And then September 15th. Well, that's probably a little soon. Let's say October 1, it could be $15. Oh, mad. A madman. The modern Greek. Okay, that's great, Mad Greek. We're gonna be over 5.5. That feels good. We're gonna have some oomph. Hey, Steve. I always thought it was crazy that Finger has only a few vehicles done. They need to scale. That's what I think. I don't know thousands, but it's got to be this repeatable cycle. That's why I wish they would have raised more money. But remember, it's easy to say. One reason they wouldn't raise all the money, it's not a particularly good reason, is the contract's not that big. They didn't want to raise a lot of money and have it just sit there. But I would have taken it. If the Toad and those guys are getting the stock to $5, let's say they sold 10 million shares at 3.25, bringing 32 million. Then you're talking about a company that doesn't need really to go to market again. But that didn't happen. Hey, Keith. Market crash. That would push the stock higher again. That's one big issue. You can buy at $5. Yeah, $5. I think, no, it's going to be interesting. If the market crashes, it doesn't mean all stocks are collapsing, and it usually means a rotation of leadership. So you're going to rotate out, I would have thought, of companies like NVIDIA and the rest, but maybe not. Maybe NVIDIA stays at the head of the pack, but maybe you come out of stocks like Amazon. But Amazon's got a big cloud computing, big CIA contract. They've got more data probably than anybody. So maybe, it's confusing. I don't know yet. We'll play it as it goes. But I think a lot of leadership is already changing, going global, going into the metals. It's already happening. It's already happening. I think unless there's something else, I might just end it. I had other things to talk about, but I'm not feeling it. I'll try to pay attention tomorrow, every day from now on, to see if there's any news before I go out and do any errands. But unless there's something significant, I don't really expect it one way or the other, except I do think the price will be up tomorrow. And I think it's not going to, if it starts to go up, once it gets to the high 50-cent range, 60-cent range, it might pull back a little, but I don't think it's pulling back to 51 cents from there. So it'd be nice if the shorts came in and it opened at 48 cents or 47 cents. That'd be great. But anyway, I think I'm going to leave it at that. I wish everybody a happy 4th of July. And I hope you have, enjoy your last barbecue. And, I wish for peace in the Middle East, in Eastern Europe, in Africa, around the world, particularly for the children. And we have to say prayers for the children who died in Texas, and for that young father who saved his family and he gave up his life. And others. What do I think about GBUX? I think I would rather own Railtown, but that doesn't mean GBUX won't have a good morning or a good day. Let me see if I can find it. Yeah, there's GBUX. GBUX, when it popped up to that 3, whatever that is, it started to roll upward on its downward movement. I think GBUX is saying to you something's up, that it's, there's something happening. So it pulled back a bit, which is normal, testing. But to me, I'd have no idea if GBUX is going to go up tomorrow. But I wouldn't be surprised if GBUX goes up to continue that pop. That was a high volume, and it went over 3. That's telling you something's up. So I think if I had to guess, GBUX will go up. If you want me to narrow it down to tomorrow, maybe. One thing you got to be careful of is GBUX might have gone up just to capture the dividend. And so that's a head fake. So time will tell, but that could just be a head fake because of the desire to capture the dividend, and the stock could come back down. So that's not much of an answer. I wouldn't be surprised if it tries to go up tomorrow. But I do think it might have a limit at 4.5. On the other hand, it might blow right through it. I think $7 has something to say about life. And I think it's going to be hard to get through $10. I'm just looking on the chart. Last time it popped up and then pulled back like that, and I don't see another single example of it. Previous time it's popped up and continued its run upward. So that might not be a good sign. That might have just been volume to capture the dividend. I don't know, Michael. Let's watch it. I'm going to say I would be on alert for something good to happen in GBUX, but I'm not 100% convinced that that is going to follow through. Well, hopefully you get it below 50 cents, but it closed at 51 cents, so you're asking a lot. I think your question is going to be tomorrow getting it below 60 cents because the high was 62 cents. It's already broken out, and Friday it's over. It closed at 51 cents when you translate it. If the dollar ratios have changed, maybe you'll get it a little cheaper, but you're going to be paying in Canada at 69 cents. It's breaking out. So I wouldn't try to get too fancy. I mean it. I think you're going to be in a race against time just to buy it before that inevitable conclusion of negotiations and its announcement occurs. Is it going to be tomorrow? Is it going to be next Monday? Is it going to be August 1st? We'll find out. But I think any day, it could be any day. I think it should have been in June. I think we're already on borrowed time. So I would be more concerned with buying than at what price I'm buying it. Unless if it spikes, you can try to do a pullback, but I wouldn't get too cute. Yeah, amen. No, I'm not watching that. Why? Is something going on? Please don't. I want to get away from all these crappy stories that only help the CEO. Only the CEO gets to fly first class. Only the CEO gets to buy a new vacation home. Only the CEO gets to go to conferences and hang out in boardrooms and act like a big shot. Probably a better vowel would be an I. It's just stupid to trade these. But yeah, I see what you mean. It's gone up.
So the company just dropped AI agents into the call center. Yeah, it's going great. One extended call time by...
Yeah, I see what you mean, Michael. I see what you mean. I don't want you trading over there. But it certainly has shown, it is showing strength on, I think it's too late to buy into it. And I would be tempted to sell, but I might be way too early. If you look at a 3-year chart, it's still a disaster, a complete disaster. The high, $100 million market cap for what? They got some contracts? Anyway, yeah, I see it. I see what you're talking about. I'm sure it's just a setup for another shearing, just getting all the sheep up in a row so they can start shaving it off. But that's interesting. Michael, that's interesting. I didn't see that, no. Hey, I'm almost like, I know you're going to tell me I was wrong. I got it. My predictions have been right. Oh, on the Canadian side. All right. Yeah, I didn't tell you. Didn't I tell you I meant Canadian? Yeah. I meant in Jamaican dollars. That's tied to the dollar. I meant in Zimbabwe currency. We'll see. Yeah, I don't think my clairvoyance has been particularly accurate, but we'll find out. Anyway, I'm going to sign off, see what I can do with the rest of the day, and I'll probably come on mid-afternoon tomorrow, unless there's a reason to come on sooner. So peace to everyone. Ciao.